Very nice. It's Katie apparatus on sale today. You want to take a look at it?
Very
nice vehicle. Everybody stay calm.
I'd like to know is where
Don't be alarmed.
What's going on? 1356. That's okay. We'll explain everything to you there.
You're under arrest, Title 18 U.S. Code.
Kidding me? What's going on here?
I'm talking to my lawyer.
Okay. That's okay. It's a phone call. That's okay. Let's wait over there.
We found it. We're covered.
What kind of incident in a dealership could cause the kind of activity you just witnessed in this reenactment? Hello, I'm Charles Intriago, and I can tell you because as publisher of Money Laundering Alert, I've spent years warning dealers about the possibility of this very thing happening right on their own premises. Federal agencies across the board have committed to a more rigorous effort to reduce crime, especially drug dealing. A major weapon in this fight has been the strict enforcement of two separate laws: the money laundering statutes and the IRS cash reporting rule. Because these laws are so important to the anti-crime effort, the government is adamant that dealership employees abide by them. First, by reporting all cash sales over $10,000, and second, by refusing to participate in any money laundering schemes. The purpose of this training program is to teach you how to comply with these laws. First, we will explain money laundering, what it is, and your responsibility to stop any attempt to launder money in your dealership. Next, we'll get into the specifics of cash reporting, including the government's definition of cash, reportable transactions, reporting requirements, and how to handle customers who try to get around the rule. Because transaction procedures vary from dealership to dealership, not every vignette will apply to your role in the store. But the law is everyone's responsibility, and you will benefit from knowing about it. Your actions could save you and your dealership from an embarrassing and expensive situation. Let's begin first with money laundering. What is it? And what should you do if it becomes a factor in the sale of a car? Money laundering happens when individuals knowingly take money derived from illegal activities and convert it to some other form, such as a car. It is routinely attempted by cash-rich criminals, particularly drug dealers. Other crimes that generate dirty money include robbery, prostitution, and illegal gambling. The money laundering statutes were enacted to make it as difficult as possible for criminals to transfer or spend the money they make in various illegal activities. So, how do you know if you're selling a car to a criminal? Well, here's a situation in which you may find yourself.
Hey, man.
Hi, sir.
What's up?
Hi, I'm Hank Andrews, and is there anything I can do for you, sir?
Yeah, I'm interested in that red XJ4 you have out in the front lot.
Mm-hmm.
Yeah. It'll match the same car that I bought last month.
Last one?
Mm-hmm.
Great. I'll tell you what, let me go get the keys, and we can take a little...
Don't worry about the ride, man. Sticker price says $38.9.
Right.
The cash right here.
Yeah.
Take the money, man. What's the matter? Don't you read the papers? Junk's back on the street big time. And the junkies keep the cash flowing for guys like me. You see, business is good, Hank. Maybe I'll be back next month to buy another car. What do you say?
Now, I know you're thinking this is pretty obvious, but this type of situation does happen. So what happens if you're caught selling a car to this guy? You go to jail. The criminal penalty for money laundering can be up to 20 years. Fines can range up to $500,000 per violation for both the person who handles the transaction and the dealership. And the government is not inclined to plea bargain your sentence away. But you're a salesperson, not a police officer. What are you supposed to do? You stop the deal. Excuse yourself and get your manager. Your manager will explain to the customer why the deal cannot proceed. In the scenario we just watched, there was no question that the customer's money was dirty, and that's an important element in a money laundering situation. You have to know the money comes from illegal activities, but your knowledge has to be based on facts, not appearances. Don't be influenced by stereotyped images of thugs and criminals. Money launderers come in all shapes and sizes, and some of them look perfectly respectable. You can't know if people are criminals by the way they look. The salesperson did not have knowledge of any illegal activity until the customer let him know that he sells drugs. Wouldn't it be easier to ignore the facts or try to discourage the customer from being so obvious? Tempting? Yes. Easier? No. As a salesperson, you walk a fine line, so you have to pay attention to everything that's said. You can't make rash assumptions, but once you have knowledge, there's no turning back. Let's put the salesperson in a less obvious situation.
Hello, sir. Hi, I'm Hank Andrews.
Tony Arnold. Hi, Hank. How you doing?
Very well, thank you. Nice to meet you. What can I do for you, sir?
I was looking around your lot. I see a car I want.
Great, great.
Tell me, does anybody in this day and age still take cash?
Sure.
Good.
Is there any specific car I can tell you about?
The white one. The white one you got out front there. Let me tell you something. If I like the deal I get today, I'll refer you to a lot of my clients. The way my business is going right now, that'd be good for 3-4 more cars a month for you.
Great. I'm always glad to get referrals.
Sure.
Meanwhile, what can I tell you about the car?
Not a thing. I'm ready to drive it off the lot right now. How much is it?
That's it. You're ready to close the deal? Well, that's the fastest sale I ever made, sir.
Look, Hank, I'm a businessman. And when I need a car, I need it right now. No dickering over prices, no hassles. So what do you say? Do we have a deal?
I don't know, Mr. Arnold. This is beginning to sound a little too easy and like a little risky too.
Look, Hank, that's the beauty of it. There's no risk involved at all. Remember the clients I told you about?
Yeah.
Every month or so, I'm going to be sending one around. They'll call you first, make sure you're available. No time at all, you're going to be winning all the sales contests, believe me. Look, don't you get it? I sell
Well,
drugs.
Mr. Arnold, maybe it's better that you don't tell me what you do for a living.
Now you're catching on, Hank.
This scenario illustrates two issues related to money laundering. First, closing your eyes to the truth, as this salesperson did, is known as willful blindness. If the deal goes through and the customer is using illegally obtained funds, the salesperson could be found guilty of violating the money laundering statutes. Being willfully blind to a criminal act does not absolve you of responsibility. The second issue covered here is known as the straw deal. To avoid suspicion, the person trying to launder the money sends someone else to make the purchase. And it's a money laundering scheme that's definitely on the rise. Naturally, there are perfectly legitimate situations where one party buys a car for another. For example, when a parent buys a car for a child. But it's important that you ask questions and get as much information as possible. If that information reveals an attempt to launder money, don't turn your back on the truth. It is illegal to knowingly participate in money laundering, and you can end up in jail if you do. When faced with money laundering, stop the deal and get your manager. While your actions in situations like the ones we've just seen could help the authorities apprehend a money launderer, many criminals pass through society undetected. What chances does the government have of catching them? The question brings us to the next segment of this tape, cash reporting. The cash reporting rule was enacted to help the IRS uncover certain illegal activities, including tax evasion and money laundering. The rule states that any person engaged in a trade or business who receives more than $10,000 in cash in one transaction or in two or more related transactions must report the transaction to the IRS by filing Form 8300. That sounds simple enough, and if that's all there is to it, we'd be done. But this is the government, and when it says cash, it means more than just cash dollars. The distinction between what is cash and what is not cash is extremely important because when a cash sale totals more than $10,000, the dealership is required to file Form 8300. For our purposes, the government's definition of cash includes U.S. and foreign currency and also any cashier's check, money order, bank draft, or traveler's check with a face value of $10,000 or less. When these instruments have a face value of more than $10,000, the responsibility for reporting falls on the bank. When a money order or cashier's check represents the proceeds of a loan from a bank or a credit union, it is not considered cash. Other items that are not considered cash include personal checks, business checks, certified business or personal checks, and credit card charges. Filing the form may not be your personal task, but anyone who is part of the sales process should be aware of the dealership's responsibility. Failure to follow the dealership's policy and procedures can have disastrous effects for everyone. Let's look at some typical sales scenarios. We'll examine each to determine which is a reportable cash transaction and which isn't.
We're looking at $14,000 total, right?
That's right.
I'll give you this check for $9,000, and I've got the rest in cash.
Great.
The customer is buying a $14,000 car. She's splitting her payment between a $9,000 cashier's check and $5,000 in cash. How would you handle this? Does this qualify as a cash sale? The cashier's check falls into the $10,000 or less category, so it does qualify as cash. Combined with the $5,000 in currency, the total payment is over $10,000. This is a reportable transaction, and Form 8300 must be filed, advising the IRS that the dealership has received $14,000 in cash.
We've decided this is a one. The price is right. We've got $2,000 in money orders, and we've got the other $11,000 in a cashier's check. Can we do the deal?
Here we have a combination of a cashier's check for $11,000 and a money order for $2,000. Must this sale be reported? Both cashier's checks and money orders are considered cash if their face value is $10,000 or less. But in this case, the cashier's check is $11,000. While the bank may have some reporting requirements on the $11,000 cashier's check, for our purposes, the only cash involved is the $2,000 money order. As it is under the required cash reporting amount, there is no need to file Form 8300.
Okay, so you're splitting the $17,000 total by paying $8,000 in cash and...
$9,000 in a cashier's check.
Okay, and that's a loan from National Savings, right?
That's correct.
Okay, so we have $8,000 in cash and $9,000 in a loan.
In this scenario, the customer is buying a $17,000 car using $8,000 in cash and $9,000 in a cashier's check. The cashier's check is under $10,000. Is this a reportable transaction? No. Normally, a cashier's check under $10,000 is considered cash, but here it represents the proceeds of a loan, so it is not. That leaves you with the $8,000 in cash. As that's under the reporting requirement, there is no reporting obligation. Be aware, however, that the dealership will have to keep on file some proof that the check represents the proceeds from a loan. A copy of the loan papers, a written statement from the bank, or a copy of the lien instructions on the bank check will suffice. Let's take a look at one more situation.
Kathy told me your new car came in yesterday.
That's right.
Yeah.
Have you seen it?
Yes.
It's incredible. Leather interior, CD player, top of the line sound system, power, everything.
Yes, and according to this, the best alarm system on the market. I guess so no one will take off with it, right? Okay, let's get down to business. You gave us a cashier's check for $7,500 when you ordered the car 6 weeks ago. How are you going to pay the balance?
I have another cashier's check for $7,500 today, and I'd like to finance the rest.
Outstanding.
In this situation, the customer has made two separate payments of $7,500, each with cashier's checks. The two payments total $15,000, but they were made 6 weeks apart. Must these transactions be reported? Yes. When two or more related cash transactions total more than $10,000, you are required to file Form 8300. In this example, after the second payment, the one which brings the total to more than $10,000, the dealership would be obliged to report the receipt of $15,000 in cash. The IRS considers transactions related when the business knows or has reason to know that each transaction is one of a series of connected transactions. Further, Any cash transactions conducted by the same party or parties within a 24-hour period are considered by the IRS to be related, regardless of whether they involve the same vehicle. Now, these are just a few of the typical sales situations you're likely to run into. The information that accompanies this videotape will help clarify all the variables we have discussed. For the most part, when you're dealing with a cash sale, the issues are straightforward. Do you need to report or not? If it's a cash sale of more than $10,000, you do. If you have any questions about whether or not a transaction should be reported on Form 8300, ask your supervisor. Be aware that the government does not consider ignorance of the law an excuse for not following it. If you forget the form or set it aside by mistake, the government could claim that you ignored the filing requirements deliberately. Their term for that is intentional disregard of the law, and the penalties are steep, between $25,000 and $100,000 for each violation. Now, the fines for failing to report cash transactions, although severe, are civil penalties. But any deliberate attempt to avoid the IRS reporting requirements is known as structuring, and it's a criminal offense which will be prosecuted as a felony. This can mean jail time and a permanent arrest record for the employee found guilty of structuring. The dealership can also be held liable, resulting in heavy fines. You structure a deal when you try to help a buyer find a way around paying cash in order to avoid reporting the transaction. Like this.
So you want to pay for the car with a $9,000 cashier's check and $5,000 in cash?
Uh-huh. That's what I'd like to do.
Well, I don't know if you know this or not, but when a cashier's check is $10,000 or less, the government considers it cash. And when that happens, I have to file a report with the IRS. Why don't you just deposit the money, then write a personal check for the car?
This F&I manager is guilty of structuring. He's attempting to avoid the IRS reporting requirements. That is a felony, and the penalty is a jail sentence. What about this next scene? What do you think? Guilty or not?
Okay, let's get down to it. I want the car. I'd like to buy it right now just the way it is. I don't believe in wasting time.
Okay, great. How are you thinking of paying for it? We have an excellent finance rate right now.
Well, I've got the best finance rate right here. 18 grand.
You've got $18,000 in cash?
That's right. So let's do the deal. I take the car, you get to thumb through lots of $100 bills. No problem. And you don't have to report this then, right? All right. I see that makes you a little nervous. How about I give you $9,000 in cash, and I'll write a personal check for the rest. You don't have to report that then, right?
Great, that should work.
Oh, great.
Bad move. Any attempt to avoid the IRS reporting requirements is structuring, and it's illegal regardless of who initiates the structuring. The law specifically says that any person or entity, including the business itself, which prevents or attempts to prevent a business from filing Form 8300 is guilty of a felony. That means it's illegal whether it's the salesperson who tries to finesse his or her way out of the filing procedures or, as we saw in that scene, the customer. If you agree to the deal, you are guilty of structuring. Those are very clear-cut cases of structuring. But if you're the F&I manager, it's your job to try to convert a cash customer to financing. Isn't that structuring? Let's see.
Now, I want to pay with cash.
And that's fine. And I know you want to pay in cash. But I just want to let you know that our finance rate hasn't been this low in months. A lot of our customers are taking advantage of it. And I think it would be to your advantage to consider financing.
While this conversation may sound like structuring, it is actually a perfectly legal financing conversation. Trying to manipulate the sale away from cash in order to avoid filing Form 8300 is illegal. Selling financing is not. Just be sure you don't suggest any change of payment method other than financing. And don't discuss or even mention the cash reporting regulations or Form 8300. They have nothing to do with financing. You have every right to sell finance. Do that and nothing more, and structuring violations will not be an issue. As for actually filling out the form, it's fairly simple and straightforward. Most of the information you need will be gathered during the normal sales process once you get down to the paperwork. Customer's name and address, proof of identity, amount of cash received, and the monetary instrument or instruments used. Detailed instructions are provided on the form itself. One exception might be the Social Security number, which is required in line 6 of Part 1 and line 19 of Part 2. Occasionally, customers question your need for this information or balk at supplying it. Does this mean they have something to hide? Of course not. But when these situations arise, they can, with just a word or two, turn into structuring situations. Don't let this happen to you. The consequences are too severe. Never discuss the dealership's cash reporting requirements with any customer. The customer is not involved with the filing of Form 8300 in any way. If your customers have concerns about providing the information you need, or if they mention the cash reporting requirements, refer them immediately to your manager, who will explain the dealership's responsibility and answer any questions they may have. Regardless of the kind of cash transaction, single or multiple parties, straight currency, or a combination of monetary instruments, when the dealership receives more than $10,000 in cash, Form 8300 should be filed promptly within 15 days of receiving the cash. Some states have additional filing requirements when dealing with cash sales. Check with management to see if anything besides Form 8300 needs to be filed in your jurisdiction. If everything we've discussed makes you feel a little nervous, that's good. We are dealing with serious matters that can affect not only your career, but also the very life of the dealership and the well-being of your fellow employees. If you're not certain whether a transaction is a cash sale, get clarification. Do not do or say anything which might be construed as structuring a deal. Remember that there is no need to mention cash reporting regulations to your customers at the time of sale. The dealership files the form with the IRS. It's as simple as that. The dealership is required to notify the customer in writing that Form 8300 has been filed, but that can be done with a simple form letter anytime on or before January 31st of the following calendar year. The letter will state when the form was filed and the purchase involved. A sample letter of notification is provided in the study guide. Mistakes do happen, and if the dealership's track record for cash reporting is good, the IRS may recognize the violation for what it is, an oversight. By following your dealership's procedures for cash reporting, you'll be doing all you can to prevent more serious problems. We've discussed both money laundering and cash reporting. Let's take a look at one more scenario and see if you can spot the issues involved.
Well, you were very lucky. We just got that car in today. How did you want to arrange payment?
Well, I have $9,900 in cash from my husband. He collected from his bookie yesterday. So why don't we make this a straight cash deal, okay?
Great. So the $10,000 shouldn't be any problem.
Good.
This situation underscores a number of things. First, this is a definite money laundering situation. The customer admitted the cash came from illegal gambling. The F&I manager should have stopped the deal immediately. Second, it doesn't matter that the cash is under $10,000. Cash reporting and money laundering are two different things. Finally, it shows that appearances can be deceiving. Criminals can look just like everybody else. Okay, let's review what we've learned today. First, money laundering is a crime, period. It can't be fixed by ignoring the facts, and it can't be fixed by filling out a form. If you knowingly take money derived from illegal activities, you can face money laundering charges whether or not you filled out Form 8300 and filed it. When confronted with what appears to be a money laundering attempt, stop the deal and get your manager involved. Second, cash sales over $10,000 must be reported to the IRS. Cash can be any amount of U.S. or foreign currency, a bank draft or traveler's check, with a face value of $10,000 or less, as well as any cashier's check or money order with a face value of $10,000 or less, unless it represents the proceeds of a loan. You have 15 days from the receipt of the cash to file Form 8300. You have until January 31st of the following year to notify the customer. Intentionally disregarding the reporting requirements is a serious offense. Any attempt to structure the deal in order to avoid the cash reporting requirements is a felony. In every aspect of the regulations and laws we've discussed, dealerships are being carefully watched. How can you be certain you're always within the law? Try this. You know what a routine transaction looks or feels like. If any transaction looks or feels different, check it out. Take no chances. Remember, the buck stops here. The government tends to suspect one of three things when they find violations of cash reporting in a dealership: intentional disregard, structuring, and money laundering. The assumption is that the dealer or management could have somehow prevented the violation. And because there is not much sympathy for these situations, the penalties are particularly stiff. Fines can run as high as $100,000 for each violation of the cash reporting law. The fines the dealership pays are per violation. That means that if your employees do not report, let's say, 10 cash transactions, and the IRS discovers the violations, at the very least, you will be fined $50 for each missing report. If the government can prove that your failure to file was intentional, the minimum fine will be $25,000 for each violation. Multiply that by 10, and you've got a fine of $250,000. Heck, you'd be better off giving the cars away. As bad as the fines for cash reporting violations sound, the consequences for money laundering are far worse. Your assets, including the dealership itself, can be seized, and the laws regarding seizures are written in such a way that even if you're found innocent of any wrongdoing, you still have to go back to court to retrieve your assets. Even if you win the criminal case, it may be a moot point. In the time it takes to recover your assets, your working capital may be sorely depleted and you could lose your entire business. We haven't even mentioned repercussions from the manufacturers, but, like the government, manufacturers take a dim view of dealers violating any law. All manufacturer franchise agreements state that a felony conviction against a dealership or anyone in upper management is grounds for immediate termination of the franchise. All in all, it's not a pretty picture. Money laundering and cash reporting are serious issues. How can you protect yourself and avoid the problems that could occur? Begin with thorough employee training. This videotape should be required viewing for all sales employees. The next step is to document their training. Have them sign a statement verifying that they have watched the videotape and understand their responsibilities where cash reporting, structuring, and money laundering are concerned. Keep this documentation in the employee's personnel file. You should also develop a written policy. Basically, a written policy is an agreement that the employee signs to the effect that he or she will abide by your policies and procedures for cash reporting and money laundering controls. The employee agrees to attend educational meetings. He or she won't discuss cash reporting laws with customers. The employee will never structure payments with a customer to avoid cash reporting requirements, and he or she won't knowingly take money derived from illegal activities. As with your training documentation, the signed written policy should be kept in the employee's personnel file. We've included this sample policy in the material that goes along with this video. In addition to providing training and a written policy, you should designate somebody in management to oversee and document employee training, conduct periodic dealership audits of cash transactions and filing requirements, and provide additional clarification of the laws when necessary. While these policies will help reinforce the laws with which employees must comply, they have importance far beyond that. If an employee forgets to file Form 8300, you can demonstrate to the government that this was not a case of intentional disregard. You can show that you have conducted mandatory educational programs on cash reporting and money laundering and have developed a written policy prohibiting violations of the cash reporting rule and the money laundering statutes. If the government determines that the employee intentionally violated the law, you can use your documented training and signed dealership policy to show that the employee acted independently outside the scope of his or her employment. Regarding cash reporting specifically, you must file IRS Form 8300. Here are some guidelines. First, the dealership has 15 days from the date of receipt of the cash in which to file Form 8300. If there is an isolated incident where you don't have all the information, file the form anyway. Get transactions on file so there is a record of them. Filing the forms is important because it shows the government that your dealership has a history of compliance. In case of an oversight, and mistakes do happen, your paper trail could help you counter any allegations of intentional disregard. Second, notify the customer. Even though Form 8300 is a matter between your dealership and the IRS, and the customer does not have to sign anything, you must notify the customer in writing that Form 8300 has been filed with the IRS, and you must do this before January 31st of the next calendar year. A sample form letter is provided in your study guide. Another area of concern for managers is how to handle a structuring situation or questions regarding the cash reporting requirements. In this tape, we have instructed salespeople to refrain from discussing the cash reporting rule with their customers and to refer the customers to you instead. When that happens, what should you say?
I understand you have some questions about the cash reporting requirements. Mr. Johnson, there really is no way around filing this form. We're required under federal law to report all cash transactions over $10,000 to the IRS. But I want you to know, the IRS is not going to look at this form and assume you've done something illegal. Over 150,000 cash report forms were filed with the IRS last year, and the vast majority of those, no audit or any other action was taken by the IRS. So the bottom line is this. We have to file the form, but it shouldn't have any impact on you. So let's start the paperwork so we can deliver that new car to you today, okay?
Ultimately, any discussion concerning the cash reporting requirements can be boiled down to two statements. One, the dealership is required to file Form 8300 by federal law. Two, there are no exceptions to the rule. What about money laundering situations? How do you handle a customer who appears to want to launder funds or has, in fact, admitted that his money comes from illegal activities?
I'm glad we're able to find the car you needed.
Right.
Do you even want to hear about warranties? Or...
That's not necessary. I don't keep a car long enough for that to be a concern. Hank, let's get down to business.
Okay, great.
I've got the money right here. Good. I've got my own customers I got to see this afternoon. And if I don't see them in time, they get anxious. I got to get there before they crash. Just like in your business. Customer service is the name of the game today, right?
Yeah, I mean, even for junkies? Or...
Especially junkies.
Oh, Jim, hi. Mr. Arnold, this is Jim Morgan, our sales manager.
Hi, Jim. How you doing?
And
Fine,
Jim,
Mr. Arnold.
Mr. Arnold just selected a car, and we're ready to get down to business.
Anything out of the ordinary on this one?
No, not at all. It's going to be a cash transaction, but besides that, no, that's about it. I mean, there's nothing wrong with cash, is there?
If you have a concern about cash, I'll write you a check.
Oh, that won't be necessary.
Oh, good.
We won't be completing this transaction.
Really? Why not?
Well, Mr. Arnold, I overheard you discussing your business with Hank, and I'm concerned that the money comes from an illegal activity.
I don't really look like a criminal to you, do I?
No, sir, you do not. But I can't ignore what I've heard. We can't sell you a car.
Jim, the manager, has taken care of the money launderer. But what about his employee, Hank? Don't take chances with employees. If you have any concerns that an employee is engaging in money laundering or structuring, it's your job to investigate promptly and terminate the employment relationship if your findings warrant it. The employee's signed copy of your written money laundering policy will provide support for your decision. Now let's briefly recap management's responsibilities regarding money laundering and the cash reporting requirements. First, train your employees so that they fully understand the dealership's procedures for reporting cash sales to the IRS and for handling money laundering situations. Document their training. Second, Develop a written cash reporting and money laundering policy, making it clear that any attempt to launder money or structure a deal is prohibited. Have each employee sign a copy. Keep the signed policy in the employee's personnel file. Third, develop a formal system for tracking cash transactions of more than $10,000 so that Form 8300 is filed in a timely manner and the customer is notified by January 31st of the following year. Fourth, designate somebody in management to review cash reporting and money laundering procedures and ensure that they are being followed. Let us remind you again that these laws have had a positive effect on the government's efforts to catch criminals. Consequently, law enforcement agencies will continue to monitor dealerships. And when they find violations, they will take a no-nonsense approach to prosecution. You need to be diligent in protecting your dealership from any violation of these important laws. Ultimately, the buck stops here.